that. Okay, so I said to you guys that we're gonna continue today with the bias because it looked like we needed a little bit more work on this. So why don't we just, concentrate on this, focus on this, and we're gonna go through as many exercises on the bias, that we could do. So here's your first chart. I'm gonna give you a minute. I'm not gonna ask you right now what you think of this. I want you to really go through this, obviously a little bit faster than you would have done this at home, but I want you to, like, in silence, think about this, make some notes, go from column number 1 to column number 15. That's gonna be our point of reference. And tell me, write it down, what is your bias? So I'm gonna give you like a minute or so. Go ahead, guys. All right, guys. So what do you think? Is this an accumulation or a distribution? Maybe somebody wants to, go through this with me. How about that? Before we go into the solution. Dimitri is saying, first thought accumulation, but switched to distribution when analyzing the last two swings are in the same accumulation. So we're 50-50 so far. Redistribution, Corey is saying. All right, 5 more seconds. Another distribution. Okay, so we have, out of people who, who submitted the answers, we don't have a lot. So it's okay, if we want to be a little bit tentative here, that's fine. So we have 3 cases of the distribution and 1 case of an accumulation. All right, any volunteers before, I jump into this? Arvin, do you wanna do that? Do you wanna go through that together? And we'll kind of go, through the analysis together. What do you say? Okay, let's do that. Hi, Arvin.
Hi, Raman. How are you?
I'm doing well. I'm hearing a little bit of the echo on the background, so I don't know. I'm probably on the speaker. Usually, when I'm on the speaker, that goes into the microphone and comes back to us. So if you could,
Uh, I am on the speaker. I don't know how to get out of it.
I see. Okay, right now it seems to be okay. So you guys tell us, if we're gonna not have a good reception here. Well, let's start first with the bias that precedes the trading range. What is the bias that precedes the trading range?
It's a down bias all the way down to the yes there.
Okay,
And then you get to the, okay, go ahead.
let's recognize now the character with which the downtrend happens, right? So look at the largest swing in the downtrend. Notice the volume signature, supply is increasing, right? So there is
Yes,
definitely institutional selling that we see here that started probably from this bar right here, kind of like a kickoff momentum bar, uh,
yes,
breaking out that upsloping structure, and then the whole downtrend starts. The way how they sell reminds us of this structure, right? So, for instance, 1, 2, and 3, right? So, increase of the supply, more supply, less supply, right? So
yes,
therefore, we are expecting after lessening of the supply some kind of rally, and that rally we're probably expecting that's going to be better than what we've seen before. So therefore, we are expecting an automatic rally or a change of character. Okay,
yes.
so what's the bias as we start going into the columns 7 and 8 here, into the trading range? Is the bias still to the downside or to the upside?
I would say it's still to the downside.
It's still to the downside, right, guys? So we need to see, I mean, like if we're at the selling climax, we're thinking, um, well, it's a stopping action. Does it give us a bias right away just because it's a stopping action? Probably not. We still would be thinking, what's the previous bias of the trend? It's to the downside. And this bias needs to be confirmed or it needs to fail. So that's what we are trying to do. Then the first rally is a good rally for us to think, in those terms. So let's look at the first rally, automatic rally. Arvin, what can you say about this rally? Do you see a lot of bullish characteristics?
I do see quite a bit of bullish bars here.
Yes.
Uh,
Uh-huh.
and the first swing momentum is quite large, and it
Yes.
overcomes the intent of the on the yes right there.
Right there. Yes. So Arvin is going very methodically through everything that we want to notice. We want to notice what kind of momentum we have off the bottom. Are there true buying? Is there institutional buying? And we want to confirm that increase in the momentum signature with the increase in the volume signature. So we want to see that increase in effort. We want to see momentum increase and also, increase in the price movement. We want to have the largest rally here. All of those characteristics are there. So therefore, we know that there is some kind of institutional buying that is happening. What would be our bias at this point of time? We would be thinking, wow, we're probably like 50-50 here. There is a shift into the bullish side because there is some buying here. So what we could do is we're not trading the range in phase A. We could just wait and observe what's going to happen next. Would the bullish bias be confirmed on the next reaction? Okay, well let's do exactly that. Arvind, when we look at the next reaction, would we say that the bullish bias is confirmed?
I would say yes.
Okay, why?
Well, if I look at that downswing and compare it to the downswing on the left, it's a much shorter downswing.
Okay, are we
Uh,
talking about this downswing or like let's say this big downswing?
I would say both of them.
Both of them. Okay, well let's compare, right? So first, distance-wise, right? We
Yes.
probably would be thinking that reaction number three, um, let me just be a little bit precise, 14 and then 29 and a half and 43. So there is more distance that is covered by the reaction number three than reaction number two. Well, reaction number
Okay.
two had been a cell in climax, and it got us into this oversold condition, suggested a rally. Um, so this reaction here, it still comes as a higher low. So I would be thinking that as a higher low, that first of all, suggestive of the rally. Secondly, maybe it's suggestive also that more testing is going to come, and we want to see that test, to be kind of like in line with the accumulation bias. Let's say if we're thinking here that the bias is up, then we want to have the rally that's going to, come to this level, maybe overcome upthrust this level as well. If the rally is going to fail, that's going to, probably, be suggestive that the bullishness is going away. And if we see some kind of bearish signs, then probably the redistributional bias is going to resume itself. Well, we see that the rally is not that great, right? So this is probably a good example of the weak rally. Why? Because look at the commitment. There is only one bar that commits to the upside in this upthrust manner. So, Arvin, so what bias would we have after this rally? What do you think?
Uh, I would say bearish.
Well, we would either have a bearish bias or we would say like this is a very suspicious rally, like it looks like a weak hands rally. It doesn't commit above, and so on and so forth. And we could also say we're still in the bullish bias, but the next reaction will tell us. And Arvin, what happens on the next reaction?
The next reaction confirms that that's down bias because it goes below, it commits below the intention
Okay.
of the, yes,
Yes, commits below, commits significantly, and then look through the whole thing how the supply signature increases,
yes,
right? So we were thinking like, is this a bearish indication, the rally? And now looking at the reaction, this is such a sign of weakness. Then we definitely are thinking that, yes, we came back to the bearish bias that we had before. Okay, well, could we confirm it on the next rally that this is bearish bias? Arvind, what do you think?
yes, we can confirm it on the next rally because it doesn't overcome the intention that intention.
Okay, so previous highs. We could also construct it like this. So what do we see here on the downslope? We have one commitment up, acts as an upthrust in the down channel, and then comes back really quickly on the increased supply signature. Now we have a very interesting point of excitement here because there is momentum, some buying, and then there is less buying. So demand goes down into the upthrust and then supply comes in again. So it's almost like we see the wave of selling, buying, not buying, but price goes up, and then selling again. So what does it tell us? All this buying is probably just by weak hands. They can't
Yes,
materialize this rally into a significant commitment to the upside, and also some supply still comes.
right. So that confirms the down bias.
confirms the down bias. Okay, great. Arvind, any questions? It was important for me to hear, you go through this as well.
No, it's quite clear. I just took a look at it very quickly. I saw the breakdown below the
Mm-hmm.
selling climax, and I thought maybe that would be a shakeout, but it did not. And yes, and I was drawing the slope, the down slope like you drew,
Mm-hmm.
but I couldn't kind of see
Okay.
whether it was committing above or not. So yes,
Okay.
it
Well,
makes
let's look.
sense.
Let's look at the solution. Okay. So here is the solution. That was J.C. Penney, and we can go through the solution here. A little bit later. I want to do something else. Arvind, here's the next one. So I want you not to think about, just don't even look at the whole chart. I want you just to start analyzing it like we did with the previous chart and just tell me what you see. And I'm not going to interfere. So I'm just going to ask you these questions. In columns number 1 and 2, what kind of bias do we have?
It's a down bias.
Okay, down bias. Okay, in column number 3, what kind of bias do we have?
It's still a down bias.
Okay, so down. So let's kind of like ask you the question here really quickly. Why?
Because it did not overcome the intention of the, yes,
Okay,
right around
yes.
there.
Okay, great. Okay, so column number 4.
Uh, right through it, it continues with the down bias theme, I would say.
Why?
It's a trading range
Hmm.
from the, yes, from there, that is the automatic reaction. And I would draw the selling climax all the way down around 25. Is
Uh,
this is a substructure that you're going for?
okay, so one structure, second structure. So we're saying down bias, and then in column number 4, down. Is that correct?
Yes, it remains down.
Okay, number 5.
Still remains down
Why is that?
because it's not overcoming any of the any sorry, any of the intentions.
Okay, okay, so we're kind of intention, that's a keyword here. Okay, and then 6.
6, I'm not sure because at the end of 5, that could be the C phase, but I'll have to think about it a little bit more.
I see.
Uh,
Okay. All right. I think I know where Arvind, where we kind of stumble a little bit. I think in this kind of like definition of the intention, right? So if we're talking about the intention, what do we really mean by the intention, that the intention has been fulfilled or not? We want to see a commitment in the direction of the current bias. So for instance, in the downtrend, that commitment line will always be defined by the support level and how the price goes through that support level, right? So this, 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 this. We are seeing that commitment. Then
yes,
we have come to an extreme oversold condition, right? And then
yes,
our next commitment is going to be above this line and above this resistance, and then above this resistance. So
yes.
as we go up and commit to the upside, and we come out of oversold condition and the volume has increased so much, what do you think they have done here?
They have bought quite aggressively.
Yes. So they bought in, and that is being shown to us in this rally and in those commitments, in those intentions being fulfilled. So here, I thought that this is where kind of like this mistake started a little bit. Um, you're talking about the commitments and intentions, but there were two that were not mentioned, right? And obviously, looking at the overall volume signature is very important, right? So we have increase in the volume and then decrease in volume signature. Okay, so from bullish bias, let's say that I would say number 4 could be a bearish bias, right? We could be thinking this is a lower low, and you know, it goes below but quickly recovers, and then
Yes.
the volume goes down as well, meaning that both supply goes down and demand goes down. But we definitely see some kind of volatility increase. So I would be okay here, you know, thinking that the reaction was not that aggressive in terms of the result or the character on the volume. It was aggressive in the character of the price spread, but not necessarily, you know, the way how it unfolded here. The quick recovery was suggestive of the rally. Another failure, lower high. This is where I would probably still contain this bearish bias. And then look at how the price goes down. What can we say about the character with which the price moves? Let's say here and on these 3 reactions. What do you think?
It looks like smaller effort and larger result.
So there is some effort that comes in on the kickoff
Yes.
and at the end, at the stop-in action. So this acts as a climactic action. So there is some demand behind this. So we kind of see supply come somewhere here, and then supply just goes down, and then demand comes. So as they sell, there is this grinding down action where there is no such quick momentum to the downside. It takes time. It's only on the climactic action right here that there is acceleration, but that's usually what would happen, you know, going into the climactic action. Okay, so I would be thinking here that the character has changed with which the price moves down, so that could be bullish. And then also look at the result. We really have not committed lower than this low. There was an attempt, but this looks more like a spring. So and the selling climax relative to this low is actually a higher low. So the result to
Yes.
the downside has diminished on the more bullish character with which the reaction moved to the downside. So we're thinking now bullish. Give us a confirmation. What would act as a confirmation? Well, this is where they come in and produce some buying. And this buying, not like in the last bias game, it doesn't go down on a bar like this
Right.
with the gap,
Right.
but it actually stays here in the trading range and does not come to the lower level. Throughout this trading range, we have diminished supply characteristics. And again, this is a reaction that is going to spook weak hands. Why? Because the price goes down. But look at the character. Supply diminishes, and only at the end it produces some selling, some local capitulation, but then, you know, both the price and the volume indicate that there is some demand that's coming in. So you kind of going from bearish to bullish to bearish, then change of conditions to bullish, bullish to confirm, bullish confirm.
Yes, I see it.
Arvind, so intention, right? Right here
Yes.
was not necessarily caught, right?
Yes, I did not see
Mhm,
those lower
mhm.
intentions.
And out of the oversold condition with the big bell curve volume signature. So that's going to tell you like they are here, they are present. What do they do? Well, look at the price action. Oversold condition, lots of value. Does the rally confirm that they were buyers? Absolutely. So then
Yes.
bullish, volatility, and then the character changes. And in this case, this was a bullish. Yes, this was Chicago Mercantile Exchange. All right, Arvind. So I guess, you know, just the observations, right? So we need to still practice the skill of observation. If we're looking for intentions, how do we find those? And then also, Arvind, for you, I would say a sense of the character, right? So whenever we look at the rally, whenever we look at the reaction, develop a sense of the character of the reaction and the rally based on the spread, based on the progression to the downside, and based on how the volume signature actually develops, right?
Yes, very good.
Okay, great. Well, thank you for stepping
Thank
in.
you very much.
Thank you. I appreciate that. All right. Some of the comments here. I think on the previous chart, Simon, could we confirm the failed bullishness early in column 9 rally? Is this on this chart or on the next one? Yeah, here, right? This one? Could we confirm the failed bullishness earlier? Yeah, we could. I kind of did not go into that type of the detail, but you could see even from this bar right here. And actually, just like even thinking that a more bullish scenario would be overcoming the preliminary support, supply rally high in a more aggressive way. So that probably was kind of like the first clue. And then some supply, local supply starts to come in, and then synchronicity. And then there is a lot of volatility in this area. So I still would be staying with kind of like bullish, bearish to confirm, right? So, and then the rally confirms that bearishness. So I would be heavily bearish going into this. Probably my mistake would be in this trade, just thinking how I would analyze and trade it. I would be thinking probably this way. I would be thinking climactic, automatic, test, thrust in B, test in B, and then this is C. Please note, if I'm thinking this way, I'm still making money. Here is my point of entry. Some add-ons, maybe somewhere here and here especially, and probably would be getting out the swing position here, definitely here in this area, because that shows that the rally is going to be taking place. And then this would be another point of entry, and would be a really good point of entry, even somewhere here earlier on the break of the upthrust. Okay. But the commitment levels you've drawn, are these based on significant bars? No, I'm basing those just on high lows. These are the commitment levels. Okay, so another comment by someone. The reason why I look at these smaller rallies is because I always try to assess the chart as if it were done in real time. Well, you can do this, but your whole Wyckoff story will be created, obviously, from all of the swings. You have to see how the price, behaves. Uh, Behaves prior, to small rallies, small reactions. Okay, what else do we have here? Let me see. I think that's it. Okay, great. So we're at 450. Okay, great. Well, I thought that we're gonna stay on the buys. We didn't do one thing. We didn't do market charts. So before we go to the next exercise, let's do really quickly the market charts. Okay, so for those of you who want to have a little bit more of the fresher perspective, not once a week type of analysis in the market, you could start following us on Wyckoff Analysis Twitter. And from time to time, I tweet out my thoughts about the market. So like yesterday, I had a tweet in the evening when I looked at the market, and I said every time the supply gets to the market that's being observed, So therefore, we should be waiting for the time when supply becomes synchronous with the result. So far, we haven't had it. We did have what looks like a climactic bar, and then there were two bars that provided some supply. We still yet to see what kind of resolution we're gonna see. Like on Russell today, we actually had a good attempt to go up, but it failed at the end. And it looks like we are like on the Dow, we already having a possible, half reversal. But again, as with everything, we have to wait and double check. So this is where we are. If supply is gonna come and it's being absorbed again, then that's the pattern that we're in this uptrend. We've talked about this spot right here. Look at how bias game is played out here. Reaccumulation, 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 reaccumulation. Now there is some volatility that comes in, and that produces uncertainty. That's a point of vulnerability right there. It could be a reaction to phase C, but we yet have to kind of see and resolve it somehow. Where is the resolution of it? Okay, well, right here. So then that's the point where we're going to say there is an absorption and that has happened. I tweeted that, and then a continuation is possible. So why am I saying this? Well, because here we kind of have to look at the same picture. Definitely a character of the move is a little bit more aggressive. We would be comparing this to this, and we could see that there is more volatility. Most recently, there is, almost instant continuation there. So it's an unfolding picture, and we just observers of what is going on, and we are taking our trades according to that observation. So this has been well documented, the bullish bias until yesterday. Last night I said that um, oil is misbehaving. Why? Well, because it had to come in to 58 to maintain this stride. This new stride should have been this, and then it doesn't, and it reverses. So that is suggestive of some kind of reaction to 55.50. That was a logical place because of the line, and it just came there. I actually think that we could have more of the reaction here. I think that we could even go to 53 to undercut a more significant low, which we thought was, phase C. And that way, we're going to have a much more complex structure here that is going to have its own phase A, phase B, that still will indicate the strength, and then a higher low, hopefully, in potential phase C. So that could be the structure of this whole thing. And that would make sense because there is a lot of, I'm sorry, phase A, phase B. Those phases, they take time. So phase C could take time as well. Is this still a correct long-term bullish call? We'll have to see. Short-term, I think that, I'm kind of playing it okay, calling all of this, smaller reversals, but I don't know if I have a desire to do like such a small, small swing trading. Gold is interesting at this spot because we saw some of the buying that came in here, and that was suggestive of the rally. I think if we're gonna overcome 1480, we definitely gonna have an attempt to go to the resistance, the next resistance, and probably gonna encounter some resistance here around 1500. So it's not like a very big trade, but this could be potentially, a lower low in this whole formation, as we consolidate, let's say, to the right. And then obviously more of the failure below this bar right here, that would be more indicative of more selling. So we probably would have another like leg down to this area, 1400. 1400 actually would be a really interesting value for a lot of institutions. Please note again how they are selling, right? So there is not a lot of progression to the downside each time that the price commits to the downside. So that's long-term bullish. You know, even if we have another lower low, let's say like into this, you know, still the progress could be very minimal. And yet, throughout this whole process, speculative hands are leaving the long-term bullish position, and that supply goes into strong hands. Um, Still some uncertainty ahead with a lot of macro fundamental stuff. So gold could be attractive here, but not necessarily done with the short-term correction. So we kind of have this picture of where oil leads the market, suggesting that we could have that short-term reaction that we were waiting for. Uh, the key is just to observe whether the supply is, um, getting it done in terms of expanding the reactions. And if it can't do that, that means that demand comes in, absorbs that supply, and we could have higher prices from here. So it's the process that repeats itself over and over and over again. And, that's just at some point even boring, just to go through that all the time. Supply occurs, being observed, give us something else. All right. Okay, great. So let's go to the next exercise. Okay, so this is something that I've asked one of my team members to do for us. I've asked Michael to quickly send me two charts and show me some kind of consolidation with the prior trend, and for us as a group to think about the bias for this particular chart. And the reason why I wanted to do this is because I want to level the play field. I don't want to know what bias this is. I'm going to go through this exercise as you guys go, right? So we're going to do this again together. All right, so well, let's look at this. I thought that this was a better chart, so let's start with this. Hold on a second, what am I doing? Okay. Okay. Well, what do you guys think? I'm even not going to ask this question, I guess. Volunteers, somebody wants to step in to go through this with me? I mean, I don't know the end result of this. I don't know the bias here. Simon, how you doing?
Very well, thank you, Roman. How are you?
Yeah, I'm doing well. How's the weather in Sydney?
It's a bit cloudy today, which is probably refreshing after yesterday's heat wave.
Too much sun,
35
right?
degrees.
So it's refreshing to have clouds. Okay.
Yeah, basically.
That's great. I'm really envious. All right, Simon. Well, how would we look at this chart? Where would we start? Obviously from the left to the right. So what's the definition on the first two bars?
Looks like there's high momentum there.
I'm sorry, say again?
There's high momentum there.
I can't hear you, Simon, for some reason.
Hello?
Maybe closer to the microphone?
Hello?
Yes, yes.
Is that better?
Yes, that's better.
Wonderful.
Okay. Yeah, so.
Okay, I say high momentum there in that rally.
Okay, I'm still not hearing some of it. Simon, I don't know. Do you guys having any audio troubles? Maybe that's just on my end. Let me just correct it. Maybe. Okay, go ahead, Simon.
Hello?
Yes, I can hear
Okay.
much better.
Great. So I see high momentum rally on those first two bars, and it's on high volume as well. So it seems to be that F1 result is in sync.
Yeah, the sound kind of fades away, Simon. So I can't hear. I hear the beginning of the sentence, and then it just kind of goes away. I don't know. Maybe it's the microphone that goes away, or could we try this again? And I see that from the comments that it's the same for, for others.
Oh, okay. Maybe another volunteer may be able to assist.
Much better when you speak like this. Much better. Like I can hear everything.
Oh, okay then.
Yeah.
Okay, so the first two bars I see that are high momentum, and the effort sort of also is in synchronous with that effort and result.
Bullish or bearish?
Bullish.
Bullish. Okay, so we're coming in with the bullish bias. Okay, next reaction. Bullish or bearish?
That's bearish. The reason for that is because I see lower highs being created and lower lows also being created.
Okay, so maybe a local range, but I mean, looking at this structure, right? It seems like we are in a structure somewhere here. We are not making a low per se, right? We are trying to make it. It's an intraday. So this reaction within the context of the previous rally probably is not that threatening.
Right. So when you're referring to, and I know this is what Arvin was referring to previously about intent.
Right.
So you're always referring to the previous swing high or swing low, and that's your reference point to see whether or not something is either overcome or not.
Okay, so then let's rephrase this in such way so that we would see different intent in different time frames, right? So what is the intent, let's say, short term here? The intent is to commit to the downside, which it does, right? The price does that. What is the short term intent, let's say here, to commit to the upside, stay above, test, and then continue? It fails, suggesting continuation. What is the intent here? To commit below this support level. It does so, and then the next intent is going to be somewhere here, satisfactory, that fails the downtrend and favors the continuation to the upside. Having said this, this is one reaction, and within the context of, let's say, previous rally, if this is what was given to us, this is the lower low, and this is an attempt to commit below. Does the price commit below?
No, it doesn't.
No, it doesn't. So that's a bullish non-commitment here. And then when the price goes down, what's the character of the reaction? Bullish or bearish?
It's bullish.
It's bullish. Why is it bullish?
Because we come off that swing low and we progress upwards.
Okay, but what if we don't see what happens here? Why is it bullish?
Because we have that on that swing low, we see a demand tail on that down bar.
Mm-hmm. Swing
and then
low
next
right
bar.
Uh-huh.
Yep. And then next bar we also see an up bar. It's also got a demand tail as well.
Simon,
and,
how about this? I'm gonna say up to this bar right here. Why would we say that the reaction is bullish? And that's what I'm trying to do here. Like if I'm gonna give you these bars, that's probably gonna be a little bit easier or sometimes even misleading, right? If I give you this bar right here, this could be very misleading. Simon, how about this? The rally was extremely bullish, right? And then they were not buying anymore, but they were not aggressively selling. There was some profit taken, but the price was holding on. One time they capitulated, did not produce a lot of volume, and then that capitulation led to the higher low initially, and the price tried to rally. Some supply came in, and that produced a continuation to the downside, which only marginally committed to the downside. And on the larger time frame, it did not make this commitment. So the way how the price moved was not moving a lot, bullish, some sell-in. This is occasional sell-in, right? So not a lot of sell-in, and then capitulation here. So we only have 2 bars of true sell-in, and then everything else is kind of like mediocre. It kind of stays in the same place. If we would take those 2 bars out, just visualize this, like taking this bar away and then this bar away, how would the structure look like? We would just have a trading range, right? We would just have this, attempt to go up, test, and then a rally. That's how it would look. These 2 bars only define the more of the sloping down type of the reaction. So the character of this reaction is actually bullish. Okay, well then next rally happens. Does it confirm the bullishness of the reaction and of the rally?
Yes, it does, because it commits above the previous swing high.
Okay, commitment above. Now we're seeing commitment with a lot of progressive closes to the upside. What about the effort? Does the effort confirm this commitment?
Yes, it does. It's both got increase in effort for June and also mid-June rally.
Okay, yes. So there is definitely that increase in the volume signature that we observe. We are thinking that they're definitely buying off the low here. So they bought in somewhere here. They're buying here. So the bias is still to the upside. The majority of buying has been done up to this bar. So we are kind of looking that the last momentum swing was here. If there's going to be a reaction, probably we're going to be in this value zone somewhere here. Reaction happens very aggressively. Do we change the bias here at this point?
I think from a short term, I would say yes, but if we're looking at the longer term picture, I would say no.
Yeah, if we're looking at the long-term picture here, we're saying, okay, well, we saw how volume has stopped buying, although there is some buying here as well, up thrust commitment, and then the reaction goes to about 1/2 of this trading range, higher low, a lot of effort that comes in, but it's not necessarily like a very extreme effort like we've seen here or maybe even in this area. And higher low is suggestive that with the increase of the supply, we're going to have a retest, but we're probably still in this reaccumulation bias to be confirmed or fail. Do we fail on the next reaction?
No, we don't.
No, we don't. Does the volume signature confirms that there is less selling?
Yes.
Yes. So now we could expect some kind of rally because still a very volatile picture, we need absorption. Where is the absorption of all of the supply that comes on these 2 reactions?
It looks like the absorption occurs vertically on that first reaction on that swing low with that demand tail.
Okay.
Sorry, the previous one. Previous reaction.
Previous reaction, somewhere here?
Yeah, that one there.
Mm-hmm.
And
Where
then it sort of looks like a weak rally upwards, and then the second reaction occurs, and it looks like it would be, yes, where you've got that, where you got your marker previously.
Yeah, and you can think about like the value zone. Where are they buying? So this is a buy, and you want to visualize that, and then you're thinking, okay, if the volume signature increases here, this could be all a value buy right here, with these bars. And again, as the price goes down, there is some value here, so they're going to buy. And then look at what happens next. This area right here is also an area of absorption. So they've absorbed the price here. This is the first value zone. kind of like this. Okay, second value zone. And then after the feather, which is the absorption into the resistance, we're going to have a momentum increase. We do this bar, distribution, and then the most interesting thing happens, right? So let's just try to decipher that. What happens after this, Simon? Are
Sorry,
we changing the
sorry, Roman.
Yeah.
Just a quick question. Going back to that first deep reaction in July, June, July, yeah, that one. So with regard to that, that sort of price behavior sort of spooks me, because the reason why I sort of start to now take a down bias is there's high momentum, there's large wide down spread bars. And so, you know, I would start to go, oh, okay, that's when price is becoming, you know, unfavorable. And at what point would I, and this goes back to what you were saying before, if I got that analysis incorrect, at what point would I be assured that that analysis is incorrect and it's actually, you know, it's more bullish?
So yeah, so what's the process here? Where would we change that bias? So this is how I would be thinking. This looks like either a minor sign of strength or looks like a major sign of strength, right? We just don't have enough data, you know, going into this. So what would we be expecting after this? Either some kind of reaction to support, and then this will become a minor sign of strength, or I'm going to have a backing up action. A backing up action is going to start with the change of character that's going to have an increase of the supply, and it's also going to be accompanied by the first automatic reaction. And the key here is just for this automatic reaction to have some kind of recovery out of the low, and this low should not be very low. And we don't have that low over the low. We come to 1/2 of the structure. Recovery, you know, happens almost instantly in a spring-like manner. The price recovers back to the high. So that would be my thinking. But let's just say that we said this is too much volatility, and then our bias here is bearish. So then how would we be confirming or denying this bias? Okay, the rally comes, does not commit to the upside. We're thinking this is a weak rally here. We're going to have another attempt to retest. What kind of retest do we have? We have the low that does not commit on the close, and then it recovers in the same way to the upside. But the recovery has different characteristics. This momentum character is much better than the previous one. And of course it would be. Why? Because supply here is more than at this spot. So whenever supply is less, the price will move easier and will create that momentum. So at this point of time, I would be thinking bullish if I was thinking bearish here.
Right. Okay. Wonderful.
Okay. So then we are going into this structure. We're still having a bullish bias. I think somewhere here we're going to recognize that we're going to have some kind of reaction that's a failure. And then as we go into this reaction, into this big reaction, then we are thinking what bias do we have here?
Long term, I still see this as bullish.
Okay, so why is that?
Because we're making a higher low.
Okay. What else would tell us that long term we're still bullish here?
We don't see a large increase in volume. I mean, we do see an increase in volume, but not a large one compared to the previous reactions.
Yeah, so let's kind of deconstruct the selling here a little bit. Where does it come? On these breakout bars. This is a very natural spot for the supply to come because this is a lot of profit taken after this bar. Institutions definitely would sell into that. By the way, I hear a lot of chatter about, on the institutional side that, all right, Apple has extended too much. I'd rather be in something else than in this extension. So this is kind of like a similar situation. A big advance, quick advance from, let's say, 73, 72 into the high, above hundreds. And what are they going to do here? That's 50% in a month. And that's the character of the stock. So we are looking at some kind of momentum flyer here. We're looking at some stock that probably has been a darling, has some kind of momentum, characteristics, and they are probably getting in and getting out pretty fast out of this stock. Okay, but long term, yes, creates a high low relative to the previous support area. We have two support areas. So that suggests that still long-term bullish. Would we find a short-term bullish scenario here to confirm? That's still for us to decide. So let's just say it like this: long-term bullish, short-term still, I would say, bearish. Why bearish? Well, there is a lot of supply that's coming in and it produces result to the downside. Result to the downside is increasing at this point. Effort to the downside is increasing. And we would be thinking that this is a change of character. Change of character could lead either into a trading range or into some kind of reaction with the secondary test to the upside and then failure that leads into a downtrend. Right? So we are talking about this scenario, right? So something like this. So that's what we're looking at here. So we need to basically go in here and from the short-term picture to decide, what is it that we're seeing? Are we seeing here elements of bullishness that short-term would confirm the long-term picture, or are we seeing here a possible, continuation to the downside? So let's look at this, Simon. Or how would we approach this?
Yeah, this one is sort of a bit of a tricky one for me because I sort of see higher highs being created and then also lower lows. So it's sort of like is expanding out like a bit of like a funnel type thing. So
That's
yeah,
the
this one
worst
really gets me
pattern that
stumped.
we could have. That's the worst pattern. I hate this pattern. It's this diamond formation, expanding triangle. So if for those of you who are trading breakouts, you definitely could, resonate with this because your breakout strategy will fail here multiple times. Okay, well, regardless of this, why don't we just kind of like look at swings, swing up, swing down, and compare those, or swing down to the swing down, swing up to the swing up.
Okay. All right. So I'll look at the swing downs, and I'll see that.
Let me identify those for you.
Cool.
Go ahead.
Okay. So so after the first reaction, which is the biggest one that we've seen to date, we have the subsequent reactions, and they seem to be getting larger. So although price is making higher highs, I guess the price advancement is being negated by the larger reactions to the downside.
Okay, well, let's concentrate on you said let's concentrate on the reactions only, right? So don't think about the rallies yet.
Okay.
Think about only the reactions. Would you agree that reaction number one has a lot of supply, a lot of selling behind it?
Yes, I agree because of the supply tails and also there's some gaps downs as well.
Okay, and the volume signature itself, right? We're seeing how that first initial breakout supply comes in. There's a lot of selling. What about the second reaction? How does this compare to reaction number one?
The second reaction isn't as deep, but there's still elements of supply, but it doesn't seem to be as much. And there's also a few demand tails as well. and the overall the volume is a little bit less, probably only 3/4 of the first reaction.
So not as dangerous as reaction number one. And therefore, from here, we're going to have a suggestion when supply is becoming less, when selling becomes less, suggestion for the rally. Okay, what about reaction number three compared to the reaction number one and number two?
Well, reaction number three doesn't seem as threatening as number two or number one, because it seems to be that price sort of moves in a bit of a horizontal little mini trading range before we get that long widespread down bar, but it's not on a lot of volume.
Yeah, if you exactly look at the volume signature, so would we say that supply is still exhausted at this point? You know, from the previous reaction, from reaction number two. I mean, like relative to one, relative to two, and then three. It looks like that supply signature does this, right?
Yeah.
So, and then also look at this bar, very interesting bar. If we would just be looking at the line, which is the closest, right? Only closes. This is the close, this is the close. We would not even see this.
Mm-hmm.
I mean, obviously, it's good that we're seeing this, but at the end of the day, what kind of progression to the downside did we make? There was not a lot. So I think it's a really good observation here that supply generally goes down, and then on the third reaction, supply goes down even more, suggestive of the rally again, and maybe even better rally than the rally after reaction number two. Okay, so we're still seeing some diminished supply that suggests some kind of bullishness, maybe?
Yep.
Okay, then our last test here on the chart happens with a lot of supply coming in. We're seeing this everywhere. Look at all of that. This is all supply that's coming in. It comes in at the point where we had some selling before. So,
yep. So
what happens next is going to be kind of important, because this looks like a very aggressive rally to overcome, all of this bearishness. And then supply comes at the point where it was sold before. So we need to see what kind of result we're going to see on this increased supply signature. What kind of result do we have, Simon?
So I see that the result of the price only comes down to about halfway of the previous rally. So that aggressive rally that you're referring to, price only comes back down, about halfway, and that's on a lot more supply as well.
So I'm kind of lost here. So let's say this is 1, this is 2, 3, 4, 5. What are we talking about?
Oh, sorry, I was taking that midpoint as part of the reaction as well, okay, between 1 and 2.
We're talking about this supply, so we want to establish what kind of result does this supply bring.
Yep.
Right? So, and we're saying what result? What kind of result does this supply bring?
It's a negative result, so price ends up falling. So after supply emerges, we get a little bit of a rally on fall in volume, and then price then just starts to decrease very quickly, picks up momentum, decreases quickly.
Okay, well, let's look at the result, right? So you're describing the character with which the price moves. The result would be commitment below a specific level, right? So which level is this? Probably 80, the previous low. Did we commit below?
No, we didn't.
Okay, so downward result is decreasing. As we come to the support level, we have this bar right here. Is there demand behind this bar?
it looks like there's supply according to that supply tail, but because there's so much
Hold on, are we
volume.
looking at the same bar? We're looking at this bar right here, right?
Oh yes, sorry, yes, there is demand. Yes, there is demand.
Yeah. So it's a capitulation bar. It's just on a smaller level, it's the bar like this. They are actually analog bars. Well, a combination of 3 bars is the analog for 1 bar right here. It's basically the same action. But we want to define the level of demand also that comes in, right? So obviously, this demand right here stops the price from committing below 80, which tells us that somebody is actually coming in and producing a buy, stops it, and then the price moves on a smaller volume signature much easier to the upside, right? We kind of see in there. So it's almost like supply has been, observed or tried to be observed, and the rally should happen. Okay, well, we've talked about different reactions, right? So we've talked about reaction number 1, reaction number 2, reaction number 3. Then this was 4, 5, and 6. 4, this is where supply has increased. This is the final test. What does it produce? Diminishing supply characteristics. Supply decreasing even more, while the price is making no progress to the downside and then a higher low. Bullish reversal bar, bullish continuation bar. What are we thinking, Simon?
That price looks bullish.
Yes. The only problem here with this action is this whole area, this whole volatility, right? So we're kind of concerned about that. But at the same time, there are a lot of bullishness in the story prior to that, right? So we have a lot of momentum and willingness to sell, selling leading nowhere, absorption, and then capitulation on the way up by short sellers, and then because it advanced too quick, it had to be taken profit in by different institutions. They do. That produces this whole volatility pattern, could be also market related in general, but we're seeing that the volume signature has increased in this area in general. There are multiple attempts to go down, and the last attempt to go down kind of does not have a lot of continuation here. There is emergence of the momentum to the upside that started with this bar right here in phase B, and even this one right here. So our tactic here would be to think that this is a bullish bias. We probably would be entering on this day, and our stop loss would be somewhere here. If this trade does not work out, so be it. But this is how we would come to this point through this whole story. Again, we would be concerned about the volatility, but let's just see where we are. Michael, could you reveal the name of the stock, please? And I'll go and I'll do the chart. Viva. Okay. So we were, Michael, and thank you. Last bar was not necessary. I was kind of like thinking when I saw the chart, that gives a little bit of a clue. But fair, I probably would be less inclined to include it, but still. The key was in the analysis that we've done since this moment right here. So we saw some kind of buying behind it, not selling. We didn't know what the structure was here. It did not matter. This was kind of like a big clue. Rally was confirming. Non-commitment to the downside was confirming on volatility. feather was confirming, and then just overbought conditions suggestive that we're going to have a reaction. I thought Simon's comment about the high low was the key. So, you know, for the long-term bias, and then this long-term, short-term was interesting because of the volatility. So that was the challenge. How do we kind of like, you know, look at that volatility and think about the long-term bullish scenario? So I think it was all in the structure here. And then obviously, you know, like this reversal here, you know, bar by bar, it was more telling. Michael, yeah, please don't worry. You did exactly what I've asked you to, you know, somewhere in the middle of the range. So that was perfect. Yeah, and, you know, that's how we kind of operate this, right? That's how we go through the bias. Now, I'm going to say this, that not every time the bias will be, you know, deciphered like this. You know, it might seem like, okay, well, that was easy. There are some other much more difficult charts, and those charts we have to post-analyze after our mistakes. And I do that too. I'm always interested in the trade that fails, in the chart that fails. I want to understand, you know, what was kind of like a blind spot right there. But the process is going to be the same. From the left to the right, each rally, each reaction has to confirm the current bias or deny that bias. You know, and then looking at how the bias changes within the structure, you know, you take based on the structural spots on the timing, you know, a position at the specific spot. We said that we would take it here. How would we trade it? Sign of strength, backing up action, and we would be moving the stop loss probably on the weekly significant bar, something like that. And on the weekly significant bar, it would look like this. Point of entry, and we're moving the stop loss like this. Something like this, this. And then somewhere here, just on that weekly, we would be out, right? So 160, 90, so that would be our trade. All right, well, Simon, thank you so much.
Thanks, Roman. Sorry, Roman, just one more quick question, please. Back on the chart that you had, the one that we're going through. I think in December, yes, in December, that swing high, you said that was the last test. Why is it the last test, and when is it confirmed as being successful or unsuccessful? No, the previous one in December.
Oh, the previous one in December. Okay. Well,
the swing high.
We probably refer to the last test here as probably the last test in the series of tests in the trading range right here. We still wouldn't know until obviously a more kind of like conclusive resolution to the upside. But I would say that the last test on this chart is probably this. What would be the rationale here for this last test? I think it's the supply that comes in. So before that, we have that supply increases, supply decreases again, and then supply increases. So it's almost like the last attempt for the sellers that came in here and then reemerged again here. You kind of see their bets. They're betting at the same price into 100. So this would be the last true test. After this supply, if this supply has been observed, then that's it. It's bullish. If this supply produces damage, then we're probably in the redistribution. So this reaction was really important, and specifically how it recovered here. And we're seeing what? We're seeing diminished selling, and we're seeing inability to commit to the downside, which suggests that selling is exhausted. And most likely somewhere here, we're gonna, like, let's look at 100, let's say from 92 to 102. This is where we might have some kind of attempt to stop. what do we have? 92, I said, and 100. There is nothing here really that produces that much stop in action. So that suggests that supply has been absorbed, and we're going to have a continuation. So there are clues as the price goes through that level as well.
Right. And coming back to how I say that I tend to assess the charts in real time, going back to that other chart that you had up that we were going through, when we see that swing high and all that supply coming in December, and then as we progress through in real time, at what point would we go, okay, this supply is not damaging? Would we have to wait for a swing low to occur
Right
first
here.
before?
Yeah. So here is that emergence of the supply, and we see how supply goes down. Like there is no sell-in after this. We had, and there is nothing on this chart that I see. Let me just kind of see maybe on the quickly on this second chart right here. We kind of see this as a concept: increase of volume and increase of the supply as selling progresses, right? So we don't have it on that swing to the downside. We have the increase of the supply, and then we have a decrease in the supply signature. This last bar, again, this is the bar that contains a lot of demand behind it.
Right.
And
okay.
then,
And this was successful because it didn't cause any structural damage.
No. Yes. Well, I mean,
okay.
Yes, it did not cause any damage. So no commitment to the downside on diminished supply characteristics suggests that selling is exhausted. And if we are seeing a good reversal, then that would be suggestive of supply has been observed, and now we are potentially rallying above the previous highs. That last test shows even more absorption, and now it cannot even go to 80. It stops at 82.5. So bullish.
Right, and the confirmation of a failed test would be is if price progressed through the $80 mark towards the downside.
Yeah, so for instance, we would have maybe like in a bias game, we would have something like this, where the price progresses to the downside, has that increase of the supply, and then tries to rally back into the trading range. And we don't have
right.
it. We're stopping right at the support level here. And that support level is higher than the previous support level. So long-term bullish. I mean, like sometimes you look at the chart and it's not like, guys, I don't have the first subjective bias as to what this is, you know, and with this chart, to me, it spoke instantly here on this rally. So it told me only one thing. This is a leader and this is a momentum stock, and this shows a major sign of strength before the next move up. Why? Because this is a lot of aggression and a lot of buying. So think about who bought in here. If they would be selling, the price probably would tank below this low, and it doesn't. So this is an element of future outperformance, and it did, right? So we probably have all of this relative strength as the price goes up, which indeed we do right here. So all of that was an outperformance. And this rally defined that outperformance for us. All right. Well, Simon, good job. Some thoughts.
Thanks, Roman.
So I would say that look at the larger structure. So this is one thing that I've noticed that you kind of doing. There is a little bit of the concentration on the shorter term swings, which we have to look through, right? Absolutely. But we also have to come back to the long-term structure and put all of those smaller substructures into the much larger picture. And then there was some kind of hesitation here, you know, on the rallies and the reactions. I would say start your analysis with reaction to reaction first, because that will show you the supply. and then rally to the rally, then look at the overall structure and look at the long-term picture, something like that. Right?
Great. Thank you, Ramon.
Okay, absolutely. Simon, thank you so much. All right, guys. Well, with that, this is the end of the session. Sorry for going a little bit over. I really wanted to bring this point home. I did not know the bias of this chart. Michael can attest to this. Michael is attending this class, and he's been attending, many practicum classes. And he's the one who constructed this exercise. You could see this is like even how the slide has been done. This is not prepared for this class. Why were we successful in the definition of this bias? We have a process. We are going from left to the right. We are comparing a swing to a swing, and we are changing the bias based on the character, based on the intention, based on the effort and the result behind those moves. And the story could change. If we are incorrect on the story at any point of time, it is so easy come back to that story because the market is the one who's going to show you the correct way. We are listening to the market. We're not listening, to anyone else. We want to look at the chart and we want to understand this story, and we want to have that process of going through that bias and then methodically identifying, correct things. What I'm also noticing, guys, and this is something that I'm going to put on you, and this is where we're going to end the session. In a lot of cases, observations are made incorrectly. I'm sorry to say this, but there is more practice that is required. So we need to practice again and again and again and again. And if you're tired of practice, please do me a favor. Go to Amazon and buy a book which is called Zen in the Art of Archery. One of my favorite books on Zen. And there, the teacher goes through the training. The student goes through the training with the teacher, who for the first year only teaches him how to breathe correctly, not even to hold an arrow, and it takes a lot of time. So practice more, practice here, do every homework, be engaged with each exercise, find your blind spots. This is why we're having those Q&As. This is why we're going through the bias game and so on and so forth. All right, guys, homework, bias game, and trade desk. So we're still looking at those two things. Good session. Hopefully a lot of questions were addressed. And I hope that, you guys are feeling better. All right, guys, until next week or until tomorrow in WMD. Talk to you then. Thank you. Bye-bye.